Brian from quantlabs.net here. I just wanted to let you know, looks like this is going to be a daily update thing through YouTube and the QuantLabs YouTube channel. Just wanted to let you know I'm about a third way through a book. I've posted my reading list a few days ago. There's a lot of interest in that. Thank you very much for showing that. Right now I'm just going through Irene Aldrich's book on HFT and trading strategies. It's quite different from Barry Johnson's book. Basically, it's more geared towards probably newbies at the world of quant and HFT, high frequency trading. There is still quite a bit of mathiness to it, so you got to be pretty strong in that. But some of the cool things about this book that I've learned so far is about inefficient markets and efficient markets. Through my quant finance meetup, I've been hearing a lot how it's hard to make money in HFT these days because the markets are too efficient. So now I have a fairly good understanding of what that means through this book. But there are some formulas or algorithms that you can run against your asset to see if that particular asset is either in an inefficient market or an efficient market. And if it's inefficient, that's where your arbitrage opportunities lie. So these are the areas that you need to focus on. Another big takeaway thus far from the book is the higher the frequency on your trading, the more potential you'll have in areas of profiting. If you're on a 5-minute tick bar frequency, it's not as much as something in a multi-second frequency. So we're now talking ultra high frequency. And there's some other really good chapters. Not a lot of discussion about it, but the algorithms are there. The quant code is out there. Lots of samples on these models that show you how to forecast and estimate, usually within a day to 2-day horizon for basically estimating where a price level may be. Could be based upon volatility, could be based upon momentum of the volume, a variety of different, there's co-integration, all kinds of models that you can use to better forecast and better estimate. As a result of this book and the other book from Barry Johnson, I'm starting to come to a realization that my open source trading platform might not be enough to take advantage of these potential market opportunities. So as a result, I'm now architecting a new platform, but it'll be a very primitive, very basic platform that will integrate into the Interactive Brokers TWS platform, so that my own little platform will be able to monitor certain stocks or whatever asset I'm tracking, and be able to, based upon different quant techniques, be able to get in and out. I know the entry, but the exit is where I struggle, and at what point to exit. Right now, if you are a member of the Quant Labs premium membership, you'll notice on there's constant data of about well over 100 reports daily of the best performing stocks globally every day. And that is a system I built. I'll be building off that into another system that will be communicating between each other to do the actual live monitoring on all these assets that are being reported. Obviously, I'll have to focus on where there's the liquidity is the best, which is obviously the US and British exchanges, London, LSE and whatnot, and also moving more into Forex and quite possibly futures, as the liquidity is quite strong. They're more focusing on index funds as well. So that is where I'm at right now with the trading strategies, very early stages on the strategy development and modeling. But right now, initially, I'll probably start just doing the equivalent of paper trading, just to monitor how these algorithms perform against live data. Again, using tick by tick from the great people over at IQ Feeds. I'll be reopening my account fairly soon once I come off these books. So it's an exciting time right now, and hopefully I'll have a new platform ready to go sooner than later, as I'll be piecing together various samples of code. And that's where I'm at right now. It's an exciting period of time. And the one video that started all this off with me being on camera is that, as I said, 2012 will be the best year for traders. And I was looking that way as I'm on CNN and there's like some really big companies hiring right now, which is an early indicator of their confidence level where things lie. So it's quite possible things will boom. It's just a matter of when the European crisis gets settled. I'm starting to see early stages of all the bondholders and debt holders of Greece are getting settled, so that might exude quite a bit of confidence as well in the European markets, which will obviously spill over into the U.S. markets and rest of global, as well as for China or something like China. Their growth is not as bad as it looked. Was only 8 point something percent, which even if they were to fall apart, it'd be a soft landing, not a hard landing. So the confidence is definitely building. The numbers and the indicators coming out of the U.S. markets and different areas when the markets are looking really solid. I'm monitoring and have been monitoring the Bloomberg live TV streams for both U.S. and Europe and even Asia out of Singapore. So things are looking good on a global level, but it's personally, I think it's going to be a U.S. led recovery. It might take about 3 to 6 months, but right now is a good time to get in. Even the experts are saying that too. So I'm hoping to get the system up and running really fast so I can take full advantage of that. And that's where we stand with everything, with strategy development and the algorithms coming out of the learning of all these books. So hopefully I like to scratch a lot, and hopefully you can come along and be part of that. And if these strategies prove themselves, definitely the membership's going to be well worth the value, and you're not going to get the rates that they are right now. They will probably exponentially go up, and I'm talking double, triple times if these strategies do pay off. So again, something you might want to think about as you are looking at learning new ways to trade and take full advantage of what's out there right now in the current economy and the current market. It's looking good, not yet, but get ready.